Welcome to this week's weekly market analysis, and I am back with a voice that is still not too good. I still probably have some cause with my voice, which I lost my voice last week, and so I wasn't able to do the video. But this week I was able to do now, and so let's look at the US market. Basically, what we are seeing here, this is the SPY weekly chart, and we are now seeing here is that this week we have a rally actually through to the 135.76 level, which I was expecting some rally to go through here. However, the high wasn't able to keep the buyers wasn't able to keep the highs here, and then the sellers step in to move the close all the way below the close of previous week. So this bar here in natural fact suggests some weakness that's coming into the market. Overall, the structure is still weak, and this weakness is just a continuation of the weakness in the whole S&P 500 market. And I'm going to expect more downside to come, which probably this week I'm looking at 130 level, which might be a reasonable level to expect some demand that's coming in at this level here. So there is a downside bias for this week on the weekly chart. On the daily chart, what we are seeing here is that on the Wednesday we saw the supply came in. After the rally we saw the supply came in, and then on the Thursday we saw supply overcomes demand with a volume, high volume, and then we see this widespread down bar taking out 4 bars of rallies here, and 4 bars of or 3 bars of gains here. And then on Friday we see a lack of demand of pushing S&P 500 back up. In actual fact, I was expecting it to come back to test the 133.93 level at this level here for a short, but it wasn't able to reach there on Friday. Perhaps on Monday we might be seeing some opening gap up or what or a move up through the 133.93 level, and we probably have some good opportunity to short at this level here. 131.68 level is a level that I'm watching, and 130.48 level is also another next level. This is the midpoint of the rally here, the whole entire rally, and this is the line in the sand which will mark a change of behavior. In actual fact, in this down wave here, this down bar here has already a potential change of behavior to the downside, so the confirmation will probably be this break of 130.48 level. So once this level is broken with supply, and then we're probably going to see further downside. On the weekly chart, I am also expecting to see how price reacts when it comes into this range here, because if we see price comes into this range and we see demand comes in and push price back up above the midpoint, then I would consider this small little area to be a buying zone, which we're probably preparing, or we may say there is accumulation for S&P 500 ETFs to move to a high, and if that happens, I would expect 136.25 level, which is this high, to be broken, and we probably to see some new highs in the coming weeks. So this is also the area that I'm looking for demand to come. Even though we have a short here, we will have to be aware that there might be a potential demand is coming into the market at this level. So that's my take for S&P 500 this week. We will go to the Jakarta Composite Index next. We are now in the Indonesian market, and this is the Jakarta Composite Index. So this week what we are seeing is that Jakarta Composite Index tried to rally all the way through towards the midpoint of this down move, but it fails to keep the high, and then we close back down. I'm not very particularly optimistic by this bar, because we have buyers have shown the ability to rally Jakarta Composite Index above the high of the previous 2 weeks or 3 weeks, and then but it wasn't able to keep that high, and sellers just step in and close the price down below the 2 weeks or 3 weeks high here. So that is a signal that there is some supply coming into the market, and also evidenced by the high volume here. So supply is definitely at present at this level here. So I am going to wait for another bar to show whether supply is going to follow through to the downside or not, because what we have seen here is also that price did come into this old trading range, which you see a cluster of bars, price bars here, and price did come into that trading range but was rejected, and we came back down. But we are also holding the axis line of 3850 level, so there is some conflicting signals here. So what I would do is to stay aside and stay neutral on the Jakarta Composite Index on this weekly chart, and my expectation is probably there will be some further consolidation of 1 or 2 bars to come before Jakarta Composite Index will decide whether to break up or break down to the downside. So let's look at the daily chart for a clearer picture. We see a upthrust on the 3909 level with an upthrust, and then we see some lack of demand here. I would think this is a lack of demand and not the lack of supply, because we are seeing good demand that's coming in at this level here, but however demand just dies off, and then we see price just fall on the lack of demand rather than supply coming into the market. And also we are also coming into this confluence of this demand line and the axis line of the 3850, where we see some support is coming into the market to give to lift JCI away from the axis line on Friday, and but it was done on a low volume. So there is some lack of demand at this moment, and also the signal is not very clear as a direction of whether Jakarta Composite Index is going to rally all the way up or is going to fall down all the way down to this range. However, I am going to expect Jakarta Composite Index to trade within the range of 3774 to 3909, within this range here, and hopefully to see it hold above the axis line, which is the 3850 at this level here. Once if it's done so, and we have a further consolidation with very good closes, something like closing on the highs, dips down, close on the high, dips down, close on the highs, then I think we would be seeing some absorption or consolidation kind of action or absorption behavior that will prepare the Jakarta Composite Index to move higher, probably to come to test the 4024 level. And this, and also the 4038 level, which is the high of the old trading range, and that I will expect if the absorption behavior happens. So that is Jakarta Composite Index for the next week, and we'll go to the Hong Kong market next. This is Hong Kong market, and we are looking at the Hang Seng Index weekly chart. This week, buyers are able to bring Hang Seng above the high of last week, and we saw a high of 19,578. However, sellers are able to step in and then sell Hang Seng all the way down to below the close of previous week, so we are closing below that. However, the volume is low, so to me this is a little bit more of a no demand, basically because buyers are not fully in the market after the 2 successive high volume or 3 successive high volume bars here. We see some buying going on, and there's an immediate response to the upside. However, on this week we are not seeing buyers continue to push or follow through to the upside, and there are also no ability to hold the market. So therefore, to me, this is a lack of demand, and sellers are not really coming into the market to sell it down. And on the reverse use of trend channel, I draw this reverse use of trend line from this low to this low here, create a parallel line, and what we can see here is that within this channel, this week price has obeyed the channel and now are moving back down into the range. So we are probably going to expect some slight down move here, because I'm not expecting Hang Seng to come back to the 18,500 level, because there is no supply at this moment coming into the market. So I would expect more of a sideways movement for the next week, and also a likelihood for Hang Seng to come back to test the high of this week, the 19,578 level. And but on the overall, Hang Seng is still weak, so the bias is still down. Only when Hang Seng is able to trade above the 20,000 level and stay above it, then we'll probably see some strength coming into the market. But at this moment, I think it is still too early to say that there is strength coming into the market. So let's look at the daily chart, and on the daily chart, this is the uptrend channel, and we have broken the uptrend channel. So there is a weakness that's coming to the market. However, volumes are not picking up on the downside, so I would expect more of a lack of demand situation rather than supply coming into the market to push Hang Seng back down. 18,817 is the midpoint of this whole entire rally, and if Hang Seng will come back down to this level, I would expect more of a bounce from this level here, because we have seen some cluster of bars here, cluster of closes at this level and also at the previous level here. So there might be some demand that's coming into the market if Hang Seng is going to come back down, and I would see it as a test, and then to rally back up above the 19,182 level and probably stay here, probably test the high one more time, and to see whether how the test will be. We probably might get some absorption behavior if the market still or buyers are still resilient at this moment, but on the overall, the whole structure here suggests that Hang Seng is still weak. We haven't been able to rally back above the 20,000 level, which is about the midpoint of this entire down move. So I would want to see that happen to change my idea that this market is still having some strength to go up. But at this moment, with the sideways movement built up in this 4 weeks, and we have a response to the upside, there is some strength that's holding the market up, and we cannot ignore that. So I would want to see some further evidence for the turning point to be more concrete. But at this moment here, this is a sign of a turning point of the Hang Seng, so we will probably want to take note of that. So if Hang Seng is able to come back into this range and then find the demand coming in with a very good up bar closing on the highs, and volume coming in on the upside, then I think we have a story of a demand and also a turning point built by then. So that is my take for Hang Seng for next week, and we'll go next to the Singapore market. We are now in the Singapore market, and this is STI on the weekly chart. This week, what we are seeing here is that buyers are able to rally STI all the way up, but the sellers step in to close STI back in the mid-range. However, we are still having a very positive close compared to the previous week, and volume is slightly lower, so I would think that the demand is not as strong as trying to push the STI up, and also on the other hand, supply is also not as strong in closing STI back into the mid-range. So this is a pretty neutral bar, but on the overall, on the background here, what we are seeing of a shortening of a thrust here on the price bars, and positive response to the upside with an increase in volume. So there is some buying going on at this level here, which I would think that probably will put STI back up next week to test the high of this week, and perhaps hopefully to test the 2,900 level soon, because on the overall structure, STI is still prone to be a sell-off, because what we have seen a strong rally in the late December to early January this year, and early Feb this year, and then we have a very long sideways movement on the March, and in this movement we see no demand, and we saw price comes down with volume coming in on the downside. and we would really certainly want to see some increase in volume on the upside to indicate that demand is following up with the momentum to the upside. If we do not see that, then the STI has a high possibility that it might just come back down to the low of the 2680 level, or probably in this zone for a test, and probably break down. And if that happens, then there will be more further downside for STI to come. And on the weekly chart, I would just hopefully to see STI broke the 2900 level and test the supply line on the upside. If that happens, then we probably have a sign of strength on the STI to move above the 3031 level in the probably near future this year. Let's take a look at the daily chart. On the daily chart, what we are seeing here is that there was a breakdown of the uptrend channel, which was observed quite well, and but we are able to close back up on Friday above the demand line. So we still do have some strength in the market to hold the STI up above the 2811. It's probably simply a test at this level here, where because we see a low volume, and we probably might intraday test at this level here and closing the gap. But however, I would not expect the STI to strongly rally above the 2861. We probably might see some consolidation probably for 1 or 2 days before we come back up into the 2861 level, and hopefully to break it up to break out with high volume and trade towards the 2900 level in a couple of days. Then we will probably be seeing strength that is in the market, indicating that this move here, this turn here, will be a turning point for the STI to support STI rallies back up to challenge the last year's high. So we will have to wait for that to happen at this level here, which is a critical level. However, if it's going to break all the way down, 2767 is the line in the sand, and if it's broken, then will probably signal that STI may have further downside to come, and the 2698 level would be seriously threatened and probably seriously tested, and probably as a threat of breaking it. So we just want to hope that STI stays above here. The reason why I would think that this level, if it's breaking down all this level and come back to 2698 level, it will probably broke, because we have a very serious down move here, and we are not seeing much demand that's coming in to hold STI up. However, this sideways movement may represent some accumulation. So if price is going to come back here, I would expect some demand to come in to hold STI up, and hopefully do not break this level, because once you break this level, this whole up move here, the higher high, higher lows here, will have a first lower low, which will indicate probably a continuation of this down move. So that is my take for Singapore market next week, and I hope you trade well. Market was disappointed on the Thursday after the FOMC meeting, and Fed has not announced any concrete measures of quantitative easing measures or stimulus. So market will still be trying to digest the possibility of further easing from the Fed and the other central banks from Europe and Japan, and also weighing the lower interest rates from the BRICS. So that is all things pointing towards further easing from the central banks. So market is slowly digesting those information, and because of that, market is now extremely sensitive, and I wouldn't think that the market will rally off strongly from any base. Probably we will still see some consolidation of volatility in the tight range or narrow band to form a base in order to indicate whether they are accumulation or distribution. So we will probably have to wait for further development in the market to see what is going on in the various markets that we are analyzing: the US, Japan, US, Indonesia, Hong Kong, and Singapore market. So we will just have to wait and see what they doing in with their indices. So that is my that's what I have for this week, and I'll see you next week. Thanks.